a person from Delhi. He was promised some 8 times returns. If I remember the figure, 12 crores of scam happened to him. How can we stop it?
Intermediaries can create a UPI ID check. There could be somebody who says, I am Zerodha, and actually they are not. Money gets transferred. This SEBI check will actually show that account doesn't belong to Zero.
Futures and options, good or bad for retail people?
Well, the research tells us that retail is losing out on that.
Why are retail people still participating in FNO in your view? One of the biggest reason of me to do this podcast and invite you today is today's episode is not for likes, views or subscriptions. It's purely for raising awareness around financial frauds and SEBI regulations. And that's why today's guest is Mr. Pramod Rao, a former Executive Director at SEBI. In this episode, we are going to learn and explore why a lot of people are falling prey to financial scams so that you can safeguard yourself. We'll also try and dig deeper into how SEBI actually works and make some high-stake decisions, SEBI versus scam campaign, and a lot about SEBI regulations overall. This episode is purely in the interest of raising awareness and ensuring that you as an investor remain protected while you invest in capital markets. So request you to hit the like button because more and more such episodes needs to come out which are not for views or likes or subscriptions. They are purely for raising awareness and ensuring that our investors in India remain protected. Enjoy this episode. Pramodji, thank you so much for giving me your precious time. I want to start this conversation on a topic that is close to my heart, which is investor protection. And recently it was in the news that a person from Delhi, if I remember the figure, 12 crores of scam happened to him. And he was promised some 8 times returns. That if he does something, then he's going to get 8 times returns, right? And this is just not one-off incident I've picked up. In fact, very recently, somebody that a person follows my channel wrote me an email saying that Rahul, I've been scammed, right? People who are able to understand this, they are well educated, they are tech savvy, they use phones, laptops, internets, day in and out, but still falling victim of fraud, scams. Why is it happening?
So, thank you, Rahul, of course, one, for having me on the show and looking forward to our conversation. I think to respond to what you are asking, I would put it as maybe 2 or 3 things which I think end up driving this. There is this entire factor of greed, there is gullibility, and I think there is fear. And fear which includes fear of missing out, FOMO, as we say. I think between these 3 traits, people fall prey to many of these scamsters and fraudsters. To my mind, anybody who promises a return, I think should make people wary. One, financial markets rarely give anything which is on a promise that it will give X return or Y return. So that itself should be a red flag for people. And if they are missing that red flag, then I can only attribute it, like I said, to these 2 or 3 things. That there is greed, or there is gullibility, or there is a FOMO or fear. Fear, I will just elaborate also in terms of, you've read about these recent digital arrests which are happening and people posing as CBI or some law enforcement agency, people calling and saying unless you transfer money. So I think indeed, even in human psychology, that fear is a real thing. But in investments, I feel it is more FOMO rather than such fear.
Right. And how can we stop it? Because that's the next level of question. I mean, I'm doing this podcast. One of the biggest reason of me to do this podcast and invite you today is that people listen to us.
Right.
And more content creators should not just talk about returns. They should talk about protecting the investors. And I know SEBI has been doing fantastic job in that regard and we'll come to that. But what can we do as common people of India? A regulator, of course, will do things that they want to do. But I want to bring this point that what can I do? What can you do? What can normal people do to not fall victim of these frauds?
I think genuinely we have to revisit our psychology and our approaches to how we look at money. I think, when we hear of people making returns in the stock market, I think that is where the FOMO comes in. That is where the greed comes in. Gullibility comes in when people say, "Aapko itna return mil jayega," right? To me, the minute that is promised at a particular level, people should be on their guard. I think that is the thing which I would say and reiterate. To me, there are certain instruments which can probably indeed give fixed returns, but those are very far and few in between. It can be a government security which can say this is that return for next 5 years, 10 years, etc. And because it's the government bond, maybe you can sort of go with that. But short of the government, anybody else, I would just say that please watch and be careful. It is hard-earned money. It is people's savings, life savings, as we say. They should not fritter it away thinking that, it'll double, triple, or as you said, 8 times, 12 times. Each of that should be a red flag.
Right. So the onus, the responsibility is with the individual.
Correct.
To really not fall victim of it and control that greed or double check or triple check or 4 times check it, whatever, they could do before doing anything.
Exactly.
Makes sense. Since we are talking about protecting investors and the cases and the scams and things that happen in digital world, I also wanted to get your experience onto the table here that you've been with SEBI for quite a few years, and in your long career, which is the one capital market manipulation case or scam that you think was the biggest one and hit us hard, and what are the lessons we have taken from that?
I think, of course, some of the matters are sub judice and but have been widely reported. So I'll avoid using names, but I'm sure those that follow your channel or regular news media will know what I'm talking about. So I think one overseas fund, which sort of has billions of dollars under management, playing in our markets could really manipulate both the cash market and get F&O traders on the other side of their trades, I think became one of the biggest sort of manipulation one has seen. And there is a detailed order by a SEBI whole-time member which lays out this entire modus operandi. So those of you of your viewers who are interested could read that. I think, again, the way I would put it is that for a few years, SEBI had been puzzled about the extent of losses that were being seen by retail investors in F&O. And I can say that number was, almost at 50-60,000 crores per year. So in 3-year time frame, 1.8 lakh crores sort of disappeared. And F&O, as your viewers would know, is a zero-sum game, 0-1. So if one person is making losses, somebody else is making profit. So now what can interest a New York hedge fund into participating in Indian F&O gets explained with, that they have been actually taking away all of these monies. And what this modus operandi laid bare was that they were manipulating the cash market, leading to people participating in F&O thinking that it'll move in a particular direction. And then suddenly they would turn around and change that direction of trade and therefore stand to gain quite a lot. I think somehow the investors have not woken up or not protested too loudly. I can only attribute it to that they thought that the person on the other side was smarter, not that they were victims of a manipulation. Maybe the sums collectively are very large, but individually may have been small. So people may have lost 500,000, 10,000, and so not thought about it as a big number. But when you accumulate across lakhs of investors, suddenly that number becomes a very large number, like I said. So I think that to me was the most glaring case of market manipulation and somebody gaining. As I mentioned, matters sub judice. So while SEBI member has passed an order, it's in appeal, I think, at the Securities Appellate Tribunal. So I'm sure the law will take its own course as to whether manipulation was made out or not.
Right.
But I think as on date, that stands out in my mind.
And do you think we are doing enough for these kind of things to not repeat in future? Because what has happened has happened. Of course, we can't really undo the history. But do you think we are preparing ourselves as either SEBI or whoever is the other overseeing body to this particular case, that these kind of manipulations do not happen in future? Indeed.
I would think so. I think one, like I said, SEBI began with the research on why and how much losses are happening, took measures to sort of see that could they contain those losses, could they increase the thresholds of participation and so on. But I think that led them into figuring that there was manipulation happening, right? So to my mind, that monitoring mechanism has got strengthened. There are people looking more closely at such values of trade and people who are trading in the market. I would say that this is equally a caution notice to anybody trying to manipulate, that this is a regulator which can act and does act.
Right.
And the sums involved, like I said, run into thousands of crores. So clearly the money being large has not stopped SEBI from acting.
Pramodji, moving on now, I also want to ask you that you've been with SEBI for 3 years or so, and in those 3 years, SEBI would have taken a few initiatives to protect investors. According to you, which was that one initiative that you would call a landmark initiative that SEBI took to protect investors?
Rahul, if you'll give me the time, I'll probably tell you 4.
Okay, go for
not
it, please.
one.
Yeah.
I think one, under the current chair, Mr. Pandey, SEBI has taken a very proactive measure in terms of saying that it wants to showcase the kind of problems that you mentioned, scamsters and fraudsters that are there. So in fact, that campaign is branded as SEBI versus scam.
Right.
And they try to highlight, and they are leveraging on MII, ZAMFI, and so on, to make sure that there is a unified campaign at some level to educate investors, educate public at large about not falling prey to scams. And they are showing the modus operandi, they are showing what caution investors need to exercise. So I think that proactive approach is amongst the better ways of educating public. The second and third and fourth, because there are various investor protection measures SEBI has taken. I think one I would call the revamped scores. So scores itself was launched in 2011. But a year or so back, there was a revamp of this entire model which SEBI did. It is now got automated escalation of issues. It's tied to KRA, so investor need not fill up details on their own. They can just pull the KRA records. I think this system is got enough and more responsiveness both from intermediaries, and SEBI's created a second layer of review by designated bodies. So that's a thing. The third I would call a dispute resolution, which is entirely common now for the entire ecosystem. It's called Smart ODR. Mm-hmm. It is administered by the MIIs, stock exchanges and depositories. And it gives a very time-bound program for resolution of disputes which people have. It's 3-layered. So MII first tries to mediate or do conciliation of the dispute. Otherwise, it moves to an independent conciliator trying to do it between intermediary and investor. And at third level, it moves to arbitration.
Right.
And one has seen volumes which have crossed maybe at least in value terms about 7,000, 8,000 crores. And matters are getting resolved, in fact, at the first 2 levels, rather than even head for arbitration. So again, if investors have issues, I think leveraging these network of either scores or smart ODR really stands to benefit them. I think beyond this, like I said, the entire range of communication which SEBI does, partly it has been one of the anecdotes which we were exchanging before the show, which is that intermediaries can go ahead and create a UPI ID check with SEBI such that people who are making payment can go onto SEBI portal, check that this person is indeed registered, right, and that this is the very bank account of that person.
Right.
This is called SEBI Check or SEBI Verified, and there is a In fact, if you use that UPI code or whatever, it shows a green thumb indication. SEBI, in collaboration with NPCI and its intermediaries, created this system. In fact, there were people who were reporting identity theft, that somebody else was using their name and people were emitting money and they lost those monies. So SEBI came up with this called SEBI Check, and indeed it's another investor protection measure which hopefully will gain ground, and at least retail investors will have ability to check who they are dealing with, right, and whom they are transferring money to.
Right. I think this payment new system or new way of making payments is quite important. I really want our viewers to understand this, that tomorrow if somebody is saying that they are SEBI registered advisor or whoever they are, you can actually go and check whether they are or they are not, and whether you're making the payment to that particular ID. So you can go and check. Again, I'll try and give you links around that, because it's quite important that people understand this very point, that before you actually make a payment to a SEBI registered authority or a advisor or whoever it is, intermediaries, you actually check them before you make the payment so that you're safe.
Yeah, and like I said, many times there can be identity theft, right? For instance, there could be somebody who says, I am Zerodha, and actually they are not, but they hold out like they are Zerodha and show a bank account and money gets transferred. If it is not Zerodha's, this SEBI check will actually show that account doesn't belong to Zerodha.
Correct.
So, it's not just the intermediary, but the bank account also being a verified one.
Right.
Which is one of the great measures. So to my mind, bringing it all together, I would say SEBI's taken several such things. The other piece which I genuinely compliment SEBI is around easing a lot of pain around succession. They have revamped and reformed the entire nominations process. So when investors pass away or their families are in distress because of financial assets being lost, I think SEBI's systems are very much geared to helping the family get to those assets very quickly. They have created a tie-up with DigiLocker. They have created, like I said, revamped nominations process. There is even KRAs, which actually, once notice of death is given to any one intermediary, they immediately transmit it to all intermediaries,
right,
where a person has account, who then are encouraged to do a proactive outreach. Our own Honorable Prime Minister has spoken about, unclaimed assets and so on. This piece is making sure that from the time SEBI has instituted these reforms, these things don't even become unclaimed.
Right.
There is a legacy which we need to deal with. But I would say SEBI actions have sort of made sure that this doesn't add to that pile of unclaimed.
Yeah. No, I think these are very good level of measures that are coming up now. I just also want to ask you, and it's my curiosity more than anything else, that how does SEBI actually operate, and what's involved in making a high stake decision? When SEBI makes a high stake decision, how does that process go? If you can just give us some view.
I'll try. I think there are 2 or 3 key elements which drive SEBI decisioning process. I think first, SEBI is very committed to orderly development of the market, growing, expanding the market, and so on. I think that drives a whole set of initiatives which they adopt. The second is SEBI is highly consultative regulator.
Right.
Unlike regulators around the world or even some other regulators in the country, SEBI ends up having at least 10 or 12 or 15 committees that comprise industry representatives, intermediaries, MIIs, investor representatives, professionals from the institutes or lawyers and so on, who keep on giving ideas for reform or for change or new products and so on. I think all of that feeds into the SEBI decisioning process. A third leg is what I call the inspection and enforcement actions. Those lead to SEBI figuring out, is something wrong? Are people doing things the wrong way? Is there a way to improve or make sure that they are not repeated? And then there is data gathering. Data gathering occurs at 2 levels: by the operational departments which supervise intermediaries, and by a research department. It's called DEPA, Department of Economic Policy and Analysis, And these data sources, this enforcement action, inspections, consultations, the committees which give various inputs, feed into the entire debates and discussions internally, which result then in consultation papers, which result in boardroom deliberation. So it's a very consultative organization, open to feedback, open to listening to issues and trying to attend to them.
Right.
So on most issues, I would say this is the process. I was alluding to earlier about F&O. So the DEPA, the research team would have put together a research report on saying this is the losses in the F&O.
Right.
That would have gone to the operational department, which would have then said, okay, how do we prevent, how do we make sure that it is reduced? So several measures that they thought of.
Right.
They would go to their committee, which advises them, which comprises external people, who would have helped refine some of that.
Right.
Then they would have issued a consultation paper. In fact, if I remember, the F&O reforms drew the maximum comments. I think my colleagues mentioned that it was in the range of 12 to 15,000 comments on
12 to 15,000 comments
on what was proposed for changes in the F&O for making sure that investors were protected.
And what type of comments were these? If you remember any flavors.
So many of them were about whether this is too much, whether it is the level should be lesser, whether it should be at a different yardstick, and so on. So people had views across. There were almost 10 or 12 different changes which SEBI was proposing. All of that feedback then has to be gathered, presented back to the committee, then taken to the board.
Right.
So all of this process makes it a very involved and on top of it, there are public media, there are commentators like you, there will be print media, electronic media, many commentators who speak there. All of that feeds into this decisioning process as to what finally comes out.
Right. Right.
So yeah, it's
a quite comprehensive and holistic approach that
yes. See, and there are times when I would say that there are pressure to make immediate changes,
right.
immediate regulations. I think those have been very far and few in between.
Right.
It's largely been this process, and sometimes it takes a couple of months, if not more, because there is public consultation. You have to take note of all the feedback, attend to it, and only then go to your board. So right. It's really elaborate.
Yeah, you talked about F&O, right, and how retail investors are losing money, and SEBI publicly shared the data, and I can't remember the exact figure, 96 or 98 or whatever that number was. Doesn't really matter. If it is too high, it is too high. Why are still retail people still participating in F&O in your view? Is that again goes back to the same fear or greed or those sentimental behavioral aspect?
See, I think everybody who comes into the market, think that they have knowledge or they have an edge or so on. There are some who probably, because of those three factors that I mentioned, greed, gullibility, or fear of missing out, they can probably, I would say, become overconfident, right, or maybe trust too much in somebody who's guiding them. Mm-hmm. There are reports about, people who say we are running educational camps and then give stock tips, saying that this will get you X return, Y return, whatever. I think these factors lead them to believe that they have a method, right, that they can beat the, system. I would genuinely believe that they need to introspect. And sometimes maybe the amount of losses that they individually are incurring may not be meaningful. So therefore, they are able to write it off to experience account and so on. But if they accumulate and actually put it into more productive way of investing, many times people recommend that if you don't understand the markets, begin with a mutual fund.
Right.
And frankly, mutual funds have indeed been a sterling story in India's capital markets, risen from 10 lakh crores to now, I think, nearly touching 80,000 crores of assets under management. So to me, you have professional managers who can shepherd your money better. There are portfolio managers, or there are investment advisors you can go to design or financially plan for what you can do. So with all of this available, the individual trader or player, I would say, where's your edge?
Yeah.
And if your edge is anchored around greed, or that somebody is giving you a tip, or somebody is, making you feel you are losing out by not participating, I think you will be probably ending up losing money.
Yeah, no, that's very wise words. Want to move on to your leadership when you were at SEBI, and I think under your leadership, online bond platforms and the regulations around bonds were published. Do you think bonds are safe, and do you have any perspective on how those regulations made bonds maybe a better class and well regulated now?
So let me put it in 2-3 context, and then I'll come to the specific responses. I think one, we saw the growth of online bond platforms and investor interest. So many times people say innovation and entrepreneurs run ahead of regulation. So that's true for online bond platforms also. But when we noticed the growth of this and the sizable number of people who were interested in bonds, SEBI then issued a consultation paper and saying that, okay, we will regulate these rather than ban them, rather than prohibit, etc. And to the credit of the online bond platforms which were operating at the time, they reacted positively. They gave good level of feedback, welcomed, in fact, the regulation. And SEBI could then shape that sector. They were licensed as stockbrokers in the debt segment. They were required to make sure their transactions went through RFQ platform. There was uniformity in the information, the way they gave to the investors. Investor grievance redressal or dispute resolution became uniform. So I think all of that gave indication to investors at large that these were well-regulated entities, and to their credit, they have risen to that and sort of built. The extent of growth has been quite nice, at least what the OBPP Association and folks who are in that segment tell me, that regulation has meant quite a lot of difference and investor confidence. For the investors, I would put maybe 2 or 3 things for them to think about when it comes to corporate bonds. I think one, bonds are nothing but credit. Yeah. You are the one who's lender. In any lending business, in any time you are being a creditor, you should be prepared that there can be a delay in repayment, delay in payment of interest, or there can be even default. If you keep that in mind, then you will sort of at least begin by saying, okay, how do I avoid some of it? Avoidance is difficult because sooner than later, in any lending business, there is a loss that can be incurred because of delay or default. Building a portfolio is a better approach. So you are spreading your risk. And bond should not be your only portfolio. You should have bits of equity, bits of bond, bit of maybe REITs, InvITs, and so on. So it should be a balanced or a diversified portfolio for an investor. And bonds deserves a place, but not the place or not the only place. If you are watchful of ratings of bonds, that can be a good indicator of what the risk profile of the issuer is. Rating agencies sometimes in the past have not necessarily kept pace, but again, thanks to both SEBI intervention and market lessons, rating agencies have also upped their game. So they do, on critical developments, come out with a rating recommendation, whether they are reaffirming, downgrading, etc. Keep a watch on that. And since you deal with platforms, you have a two-way street of being able to exit your bonds also into the market. So make decisions based on these things. I tell the bond platforms the same thing, that please do not say that these are assured instruments. These are not. These are subject to market risk. These are subject to delays and defaults. And people who enter this should know that. I think that would be the overall caution that I would tell people.
Okay. I think that makes a lot of sense. And online bonds are now becoming popular. What about mutual funds? I also want to clarify and ask you this, that mutual funds in India are well regulated. We all know it, how tightly SEBI is regulating them. And recently, there's a discussion around cost reduction, and so many good things are happening on mutual funds. If I were to ask you, what is that one thing that, still on mutual funds you would like to see as a regulation, more regulation, what would that be?
I agree with you. I think mutual funds are amongst our best regulated instruments, institutions in capital markets. I was recently in a conversation with somebody comparing it to how banks are regulated in the country is how SEBI regulates mutual funds. So both are, in that segment.
Yeah.
It's difficult to sort of say which one reform does mutual fund sector require. But if I had to, I would probably talk about the mutual fund distributors.
Right.
Mutual fund distributors have been critical to the growth of mutual fund itself and the AUMs going, like I said, in 10 years, 12 years from 10 lakh crores to reaching the heights that they have today. But they remain in what I call the regulatory gray zone.
Right.
They are not directly regulated by SEBI. It is AMFI which onboards mutual fund distributors. They are agents of the mutual fund, so the mutual fund AMCs are responsible for them. However, they are a large cohort of people. There are those that are very well organized, large corporate distributors. There are those who are, mom and pop shops or small single individual distributors. One size can't fit all for them also, but I would genuinely believe that maybe regulating them, maybe recognizing them as important part of capital markets would be a good step. Maybe they can be encouraged to create an AMFI-like body for distributors.
Right.
Maybe there can be codes of conduct of how they disclose information, how they share the updates with their investors who they've brought into the mutual funds. I think that can be a good sort of thing. Again, mostly, I think regulators intervene where there is problems. I'm not saying there is a problem. I just think that if you are pressing me for what can be that
improved further, so
I
that
can talk about this as a potential improvement.
So thank you so much for that, Pramodji. I think it makes a lot of sense that there is a lot of rigor that we can put into the distribution side of the mutual funds. Let me now come to the rapid fire and ask you some quick, short, sharp questions and see what your instant reaction is.
Sure.
One thing that you want to change about Indian stock market right now?
The extent of population which participates in stock market, I think a recent investor survey has shown that it is just about 9% of our population. I think it should at least climb to 1/3 of our population participating, if not more.
Right.
That would be the one critical change I would love to see.
Absolutely. Futures and options, FNO, good or bad for retail people?
Well, the research tells us that retail is losing out on that, and I think retail should be wise enough to pay attention to that.
Right. The biggest challenge that is faced by SEBI in your view?
I think a lot of people criticize SEBI for the extent of consultations and engagement that people have to do with it. I think what they forget is SEBI regulates as many as 25, 30 different types of organizations and institutions. And each time it is coming out with a consultation, it is related to one piece.
Right.
But if they have to take up 30 pieces of changes, it will look overwhelming.
Yeah.
And I think they just need to give SEBI that benefit of doubt. If I look across to RBI regulates exactly 4 or 5 types of entities.
Right. That's much smaller in this.
So when you think about 5 to 25, you
yes,
can make out that there is a much wider playing field, playground which SEBI is regulating. And it may be different parts of that playground that they are putting out consultations on. So I think that's the misunderstood part of SEBI, if I can call it that.
Cryptos, do you think should be regulated by SEBI?
So one, personally, I'm a crypto skeptic.
Okay.
And by skeptic, I don't mean that I think it has no value. It is merely that I don't know whether it is of any utility or not.
Right.
I think it deserves its own regulator, if
Right.
you truly ask me. I don't think SEBI or RBI or the existing regulators would be appropriate.
Independent body maybe.
Yes, yes.
BSE or NSE, which is your favorite or rather preferred exchange, and why, if there is any distinction that you make?
Actually, it's difficult. I think I've dealt with both. Both are highly professional. One has a legacy stretching back 150 years or more. Other is a modern day, answer. So yeah, no favorites. I like them both.
Both are you neutral.
And there are a few more who are also licensed as
Yeah,
stock
of course.
exchanges.
Yeah.
So as a former regulator, I will not play favorites.
Okay, fine. Finfluencers, good or bad?
Finfluencers who educate are good. I think where they become part of a distribution or where they are earning income from things that they are mentioning can distort, therefore, the knowledge dissemination. I think people need to guard against that. I think ASCII as well as certain initiatives have been made to sort of say that is it promoted, sponsored, paid, etc. Sometimes, I'm told that these things also become post-paid.
Right.
So at the time that they do it, they are not paid, and later they get compensated. See, I think they will lose credibility or they will lose their influence, which really counts. If I think they are not honest to what is being done. If
Right.
they are promoting something because they are getting paid or compensated either at or after, it's fine. I think people are smart enough and will get that. Where they try to hide it or where they try to conceal it and it comes out later, I think their own influence will be under question.
Right. Last one, simple one. Who should be my next guest that you would like to listen to?
I think to me, genuinely, it would be any one of our regulatory chiefs.
Right.
They all carry important mandates. Part of it is ease of doing business. Part of it is, like our current chair says, optimal regulations. So any of the regulatory chiefs, if you're able to get, I think...
I'm trying very hard, believe me, and not making any progress there. I think it's maybe the time and the availability because there's so much going on.
Of course.
But I do genuinely feel that these are important forums. Social media should be no less powerful than the, traditional media. Therefore, I do, through this podcast, again, I want to spread that message that, regulatory chiefs, EDs should come out more and more, participate with us, sit down with us and talk to us about what's going on in their world and share that with us, share with investors more than anything else. Because things like SEBI versus scam campaign that you just talked about in the beginning of this podcast, I don't know how many investors know about it. And I'm sure when people are watching this type of content, they are at least going to go and search about what is SEBI versus scams.
Right.
And more people will get educated. So, no, definitely it's on my agenda. I hope to crack it very soon. So thank you for that. But I've thoroughly enjoyed this. And as I said, when I started this this particular episode, that investor protection is something that I am really genuinely wanting to do something about. So thank you for giving me your time. It was really, really pleasure talking to you.
My pleasure, Rahul, and all the very best. I'm
you.
sure you will, if not the next speaker, I'm sure in the lineup of speakers, one day you will have the
I hope
regulatory
so.
chiefs.
I
All
hope
the
so.
best.
Thank you.